very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. The relationship is very good with President Xi and myself.
President Trump saying he has good relations with Xi Jinping as he extends the tariff pause on Chinese goods for another 90 days. Will this be enough to stabilize ties between the world's two largest economies? Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The president also signaling that he'd be open to a deal for NVIDIA to sell a scaled-back version of its most advanced Blackwell AI chip to China. For more on the legality of the tariffs and chip deals, we'll speak to Reade, a former assistant U.S. trade representative for China Affairs and chief counsel for China Trade Enforcement. Asian stocks making gains on the extended tariff truce, offering relief to investors ahead of a U.S. inflation report that could offer more clues on the Fed's rate path. We'll get insights on how trade turmoil and the uncertain rate path are impacting Asian businesses. Nestor, CEO of the largest lender in the Philippines, BDO Unibank, will be joining us exclusively. More on our top story. President Trump signing an executive order extending the U.S. tariff truce with China for 90 days. That's averted a tariff hike of at least 54% on Chinese goods, which was set to take effect this week. Let's get more with Bloomberg's China correspondent Min Lo. And Min, the tariff truce was well anticipated, wasn't it? It's showing in the markets.
Yes, actually, we are seeing a pretty mixed reaction. Actually, not a whole lot of reaction on markets, I would say. If you look at the currency space, not a lot of movement there. Onshore is performing better than offshore. But yes, it is well anticipated, well priced into the market. What happens next is that it kicks the can down the road for another 90 days, buying both sides more time to work out the details of potentially a larger agreement. Of course, we're looking ahead to this potential in-person summit between President Xi and Trump before the end of this year. If they meet within that 90-day window, they might reserve that time to announce any bigger sort of outcome out of these trade negotiations. We know that President Trump had already signaled that he wants China to quadruple its soybean purchases. Certainly, the U.S. has been kinder to China than it has been to India. That doubling of tariff on Indian goods because of the purchases of Russian oil. The same threat has been leveled on China, but so far, U.S. hasn't acted on it yet. On China's side, we know China wants the 20% fentanyl-related tariffs to be removed. It also wants more access to high-end chips from the U.S. as well.
Min, Trump also signaling he's willing to roll back chip curbs on China, including a version of NVIDIA's next-gen AI chips.
Yes, this is very critical because for a long time that's been seen as a tough sort of national security red line for China, and it seems for the U.S., I should say, and it seems like President Trump is willing to roll that back, perhaps in exchange for some form of concession from NVIDIA, because yesterday we reported that NVIDIA and AMD had come to a deal with the U.S. government offering a 15% cut of their China sales revenue in exchange for export licenses. Now, China now can only access the H20 chips, the Hopper series of chips from NVIDIA, which is the older version of chips. Of course, the Blackwell version is a more advanced one. Have a listen to what President Trump had said.
Blackwell is super duper advanced. I wouldn't make a deal with that, although it's possible I'd make a deal, a somewhat enhanced in a negative way Blackwell. In other words, take 30% to 50% off of it. But that's the latest and the greatest in the world. Nobody has it.
Now, our Bloomberg tech team has been reporting that there is still a bit of legal uncertainty around this because this revenue for export sort of exchange between NVIDIA and the U.S. government, that could be, considered a form of export tax, and that is not constitutional under the U.S. government. So that's something that could potentially face some legal challenges in the future. But at the same time, we know China has raised its own concerns around the NVIDIA chips because of the security risk that it could pose a backdoor for U.S. government to spy on China by installing these location tracking capabilities. So China will want to ensure that those security backdoors are closed, but perhaps the more advanced chips, the Blackwell line of chips, would convince them that it is worth actually taking that risk to open the doors for more trade between U.S. and China, especially when it comes to these advanced semiconductors.
Min, thank you so much for that. Bloomberg's China correspondent Min Lo. We've also been hearing from our guests this morning on what's next for the U.S. and China after this latest truce extension, including former USTR negotiator Wendy Cutler and University of International Business and Economics professor John Gong. Let's take a listen.
So now they can really put their energies and attention on the key outstanding issues, including export controls, critical minerals, excess capacity, you name it. There's lots of issues on the agenda and not a lot of time to come up with negotiated solutions.
I think this is going to be the new normal we're going to face as we move forward. I think President Trump is going to continue this practice of every time extending this deadline for 3 months. And he's using this as a bargaining chip, essentially.
Let's bring in Claire Reade, Senior Counsel at Arnold and Porter. Claire previously served as the Assistant U.S. Trade Representative for China Affairs and Chief Counsel for China Trade Enforcement. Claire, good to have you with us. First off, when it comes to chips, I mean, the concessions getting done here, you know, paying for perhaps your export licenses, is that legal under the Constitution?
Well, it certainly is controversial, and there is a provision in the U.S. Constitution that prohibits export taxes. So to the extent that this is a condition for export for the chip makers, it certainly looks like it's dubious in terms of its legality. We shall see.
Would you say it is sort of a misuse of, you know, export controls, which is supposed to protect national security for the U.S.?
Well, it's a funny side deal, if you will, that is now attached to the export control program and is certainly, I would say, would be shocking to the experts who have worked on export controls and national security provisions in the United States and globally for many decades.
Claire, would you say there is indeed a contradiction here? One, you're supposed to use export controls for national security concerns. On the other, as we're seeing right now, it is an avenue, a way to add to the coffers.
Yes, well, I mean, you wonder whether President Trump just couldn't resist. You know, he wanted to get a cut, and his businessman instincts kicked in, as opposed to thinking about the legality of all of this. That wouldn't surprise me.
And I'm also wondering if it's really unprecedented. People say it is, but if you take a look at what happened back in June when Trump allowed, you know, Nippon Steel to take over U.S. Steel with, I guess, a caveat that the government will get a cut of it. I mean, we have seen this before, and we are likely to see it again.
Well, the Nippon Steel situation was a different form of industrial policy, if you will, and in that was also a very unusual move for the government to intervene in that way. But this is even farther afield, I would say, from what one would consider to be a rule of law, national security-based set of activities. It does make you worry that national security could be compromised by the desire to make some money. On the other hand, if you assume that President Trump's advisors are strongly interested in protecting U.S. national security, then this may be an aberration, if you will, but the actual chips that are going across to China may be viewed as not threatening our national security in whatever form it is that they are allowed to be sold.
Claire, it's also about the messaging. Are you concerned about the message that Trump is sending to other U.S. companies? Perhaps, you know what, there is a price for everything, even national security.
Well, I have to believe that there are both real national security priorities for President Trump, as well as advisors who will keep his policies from falling off that cliff. It doesn't mean that he won't ask questions and push boundaries beyond what's conventional. We've seen him do that all across the trade landscape already. So it's probably not surprising that he's probing in the export controls area. But I would say that there will be more constraints on him in that particular area, including political constraints, because if he makes the mistake of giving away the store to a strategic competitor, there is really going to be hell to pay politically.
We've talked at length about how Trump and his policies are upending global trade, but some suggest that this is a new and dangerous path for global trade. How do you assess what we're seeing right now and the implications of the actions being taken at this point in time?
And when you're asking, are you looking at the full landscape of what he's done since April, or are you specifically thinking about the export controls?
The export controls.
Yes, dipping your toe in those waters is very controversial and, as you pointed out, potentially very dangerous if it actually jeopardizes national security. And the whole pay-to-play idea, it will seem to many as if there are certain areas of policy for a nation that should be cabined off from any kind of business transaction related to how those policies are undertaken.
You've been privy to U.S.-China negotiations, trade negotiations in particular. I'm just wondering whether there's a sense that China is winning at this stage.
Well, I think it's difficult to say because we are not fully aware of what is going on behind the doors of the negotiating rooms. I will say that the Bessent comment early on that Bessent believed, Treasury Secretary Bessent believed that China had a very poor hand in the poker game, if you used a poker game analogy, was mistaken. It is very clear that China is acting very strategically and has a pretty good hand to play. So I guess what I would say is perhaps it's most accurate to say that the United States does not have the upper hand in this negotiation. It's really much closer to two equals here, each with different leverage.
Not to mention,
yeah.
And not to mention that China has maintained its own red lines at this stage with the extension of the trade truce to another 90 days. Are you more hopeful we could see a trade agreement by the end of it?
Well, I feel as if the strategic directions of both countries are really not headed towards a collaboration. They may be headed towards a detente because for each of the countries it is in their self-interest not to completely blow up the relationship in terms of economic relations and trade relations. But that will be the basis on which any deal is made. These are not friends. These really are two countries trying to come out on top, each of them. I think China does not believe that there really is always a win-win situation. They would like to be the ones who win alone in what they may perceive as a zero-sum game. And I think there are certainly China hawks in the United States that feel very strongly about this. I must say, I think President Trump has some instinctive sense that there is a deal to be made. And what I don't really know, and we'll have to see, is how comprehensive or long-term any deal could be. I am inclined to think that it will be a deal, if there is one, that meets President Trump's short-term political needs in terms of, for example, fentanyl, the farm trade, which has dropped significantly with China, getting the critical minerals to flow in a way that seems more stable for U.S. interests. And that the question will be, what does China want on the other side of that ledger, and what is the United States willing to give? But none of this, I think, will become a grand bargain.
Is this the new normal for U.S.-China trade relations? We had a guest earlier on talking about how these short-term truces are, in fact, what can be expected from here on in terms of bilateral relations between the two.
I think that's, we're crystal ball gazing now, right? And there are many different factors that come into play that will determine the relationships between the countries. I think, given the fundamental differences in objectives and the competition between these two major players, that you can't, well, you can, but that it might be most likely that you would be looking at incremental deals rather than that may have a short term to them. I just think there's so many
issues. Right. There's so many issues that they're trying to iron out. I'm just wondering what's key right now. Is it about AI chips? Is it about rare earths? What's key here?
I think for China, their direction is relatively clear. They are looking to keep an external environment that is as calm as possible so that they can continue to develop their economy and so that they can be dominant in the areas of the economy that they view as important for their future growth and their future ability to be number one. They also have really resented their dependence on other countries, including the United States, for technologies and having to pay with licensing fees and other costs to get the benefits of these technologies. So they want to have their own technologies so that they are not dependent on another country. So, for example, that they have their own chips, so they're not subject to the pressures that the United States can place on and other trading partners can place on them by restricting chips or other technologies or machinery. They don't like that. No one would like that. So they not only want to get rid of that dependence, but they would like to turn the tables and be able to exert this kind of leverage the other way to benefit themselves. So I think that's the Chinese perspective. The U.S. perspective, again, I think there is a real mixture of views among Trump's advisors, some of whom I think would like to just cut off ties with China altogether because they view China as so dangerous, whereas others may have more of a sense of some of the business interests and may be amenable to the idea of there being continued relationships in areas that don't harm national security. And then you have President Trump himself, who I believe has a lot of faith in his own deal-making abilities, and it just seems to convey the impression that he thinks a deal can be made and he thinks it can be a deal that's a win for him. Again, given the narrow areas where there seems to be a realistic, practical possibility of coming to some agreement, right, I think it's fairly narrow channel.
We know it's all transactional for Trump. He's shown that that's how he approaches a lot of the things. I'm just wondering, for countries thinking they might just be able to convince him to bring down the tariff levels, the likes of India, the likes of Canada, should they remain optimistic?
They should work to be as creative as they can to find means to engage Trump in a way that makes him feel, sympathetic may not be the exact right word, but amenable to a change in that status. Now, for Canada, of course, the 35% tariffs don't affect any of the goods that are flowing through the free trade agreement. So it's not as dire as the situation for India, where they have 25% tariffs now on most goods, and there's the threatened additional 25% by August, the end of August. That's a very difficult situation for India.
Claire, thank you so much for your insights today. Claire Reade, Senior Counsel at Arnold and Porter and former Assistant U.S. Trade Representative for China. Still ahead this hour, we'll speak exclusively with BDO Unibank CEO Nestor about how trade uncertainty is hitting business sentiment in the Philippines. Keep it here with us. This is Bloomberg. Welcome back to Insight, and here's how it's looking for Asian benchmarks. MSCI in positive territory, up about 0.5%, but it is pretty flat for the Hang Seng Index. By the way, we're seeing some tech shares in particular in Asia getting a lift after President Trump signaled a willingness to let U.S. companies resume some chip sales to China and extended a trade truce with China as well. In terms of the Kospi, it is up by 0.4%. Trump's move on chip exports helping to ease market concerns of escalating tech sanctions and the potential supply chain disruptions. Taking a look where we are in terms of how it's shaping up for the U.S., taking a look where U.S. futures are at this point in time, slightly in the positive for U.S. futures. Of course, we're counting down that CPI print, which may just dictate what the Fed does from here in terms of its monetary policy. Still to come, an exclusive look at the Philippines' 19% tariff deal with the U.S. and its impact on businesses. This is Bloomberg. Welcome back. You're watching Insight. Singapore has raised its growth forecast for this year, and after a better-than-expected first half, as businesses front-load shipments ahead of U.S. tariffs. The government now sees GDP growing as much as 2.5% year-on-year, higher than its May forecast. But Singapore also warned the outlook for the rest of the year is still clouded by uncertainty and risks are tilted to the downside. Meanwhile, in the Philippines, the 19% U.S. tariff rate is causing uncertainty within the banking sector, including for the largest lender, BDO Unibank. Even though its bad loan ratio has remained relatively stable, its chief warned several months ago to expect the worst. Joining us exclusively, Nestor, CEO and President of BDO Unibank. Nestor, good to have you with us.
Good morning, Haslinda.
Do you still maintain your position that you should expect the worst?
Well, there's more clarity now, so I think there's something that we can look forward to. I'd like to use the saying that it's not ideal, it's not what we want, but we can live with it. So I'll just look at it from the banking sector's perspective in the Philippines. Philippine exports is only about 16% of GDP, only 2% to the U.S. So given the 19% tariff rate, I don't think the banking sector will be affected that much. Of course, there may be a slowdown.
It is about sentiment, though.
Yes.
If people look at 19%, they feel pretty uneasy, and they say, you know what, let's hold off investing in anything big. And that will play out in the economy.
That's true, but most investors look at the stability. So it doesn't matter at what level you are, as long as they can look forward to it going forward. So the investment is made on the projections of what the income will be. And if you factor in 19%, 25%, or whatever the rate is, as long as there's certainty or stability in it, you can plan ahead.
What are you hearing from your customers?
I think they're just waiting for some stability. Stability in interest rates, which I think we're starting to see, stable to going down. Stability in the geopolitical scene. Stability in the commodity prices. As we see more of those, investments will start to come in. The Philippines especially is a supply-driven economy. What I mean is that there is demand. If the supply is provided, there will be take-up from infrastructure to energy to food. So generally, it's a good situation to be in for an investor.
You talked about how there's now greater clarity. By
Yes.
that, you mean the 19% tariff,
19% tariff, yeah.
that the U.S. is imposing on the Philippines. In your calculations, how do you see that playing out on the economy as well as your own businesses? Can you put a number to it?
Well, it's just a few basis points impact on our GDP. And on our business, probably not much. We don't have a big exporter base in the Philippine economy. So I think not much. The impact will be more on the secondary effect on the economy, meaning exporters that go through goods to another country going through the U.S. There may be a slowdown.
So all your projections remain intact?
So far, yes.
What would make you rethink those projections?
Well, for one, I think geopolitical risk.
Which we're seeing right now.
We're
especially
seeing
in the
right
South
now.
China Sea.
We're seeing right now, but unfortunately, we're getting used to it. So once we get used to it, we just look at it as an ordinary course of business, and we plan on it.
The Philippines is an economy that's very reliant on remittances. We're looking at 8 to 10%
Yes.
of GDP. We also know that apart from the 19% tariffs, President Trump has also imposed a 3.5% tariff rate, tax rate, on money being sent back home. When it comes to the green card holders and
Yes.
migrant workers.
Yes.
How might this play out, and how are you looking at the risks from that?
Well, remittances from the U.S. is not a big part of the overall Philippine remittances. The big bulk of that comes from the Middle East and Europe. And these are mostly high-value workers. So we think that remittances will continue to be robust and will continue to grow. And it's because these are workers that really add value. Healthcare, technology, particularly. So while the U.S. may be impacted by the tariff or the tax that they're imposing, I think generally it will still remain stable and growing.
So on balance, can you still maintain, record earnings within the sector, you think?
I think so. Keeping our fingers crossed.
Where are you seeing growth?
Well, I think generally we're encouraged by our performance. Top line strong. Okay. Lending is about 13%. And the good news is that it's broad-based. Large corporate, middle market, consumer, all double-digit growth. Services is doing well. Mid-teens growth across the board. And it's just the pickup in clients that we have, the growth that we have that's driving it. So it's expected to continue. Asset quality remains stable, and we see it as something that will remain for the foreseeable future. Bottom line is affected by the investments we're making. We still believe in financial inclusion, so we're still expanding our branch network. In the last 12 months ending June, we expanded our branch network by 5%. So that's easily about 3% minimum impact on our operating expenses. Then we continue to invest in technology. So that has a way to dampen a little bit the bottom line. But the direction is quite good, and we are very bullish on the volume growth.
So quite a lot of projections there. Let me just break it down. Double-digit growth, is that 20%, 30%, 50%? What is viable?
On the top line, I would say low double-digit growth, maybe low teens.
And what would it take for you to exceed your expectations? I mean, would it be in terms of, people becoming a bit more, confident?
Well, two things that we're looking at. Number one is stability, and we're seeing slowly that happening. Second is probably a more benign interest rate environment. We're looking at rates being lowered maybe twice this year. So that should encourage people to invest. We also have a strong to appreciating currency. So that should be good. So if that continues, then people will start to invest.
2 rate cuts expected this year. We did have the governor saying that it'll be more than one, probably.
Yes.
Do you see the first one happening maybe in August?
Very soon. Very soon.
Do you expect one in August itself?
Yeah, we do.
And the next, when do you see that happening?
I don't know, before the end of the year.
How much would it add to your margins, your bottom line, and, the businesses?
Actually, it impacts our margin negatively because the yields are expected to go down a few basis points. But what we're hoping is that with lower interest rates, capital expenditure lending will start to pick up. And that we hope the volume will offset for the margin compression.
You talked about how financial inclusion is important, and a lot of companies, a lot of banks are actually looking at AI as a way to promote financial inclusion. How are you looking at AI and, deploying AI within the business?
Okay. In our view, AI will make an average employee look super. It will make an average employee a superstar because of the productivity that they can create. So we're deploying it in a big way. We have 5 live applications now, broad-based, and we have 2 more in the pipeline. But what we have been doing is treading on it carefully. One is that it's not a panacea, so there's a tendency to apply AI to everything, so we need to make sure that it passes the cost-benefit test. Second is we need to make sure we curate the data that we use. So we limit or we try to control the data that our AI applications use, particularly in wealth. So we want to make sure that these are reliable data. The third is the application of security. So we make sure that we put guardrails around the data that we use, because it's not going to be helpful if we don't protect it. Our clients' information is there. So we're doing it in a big way, and we believe that it will continue to pick up in activity, but companies will have to be judicious.
What kind of investments? Put a number to it for your AI.
It's very hard to put a number to it because there are multiple investments. The first thing we did is we rationalized our databases. So that's foundational. Then the second one is we put our applications on top of it. That's easy to figure out. But the third is actually the rollout and the change management it has to take. So I cannot put a number to it. All I can say, it's a big number, but I believe that the productivity has started to pick up.
With AI making your workers superstars, would that mean that you're going to need fewer workers? Do you see some kind of consolidation, maybe requiring fewer workers?
Maybe on a per capita basis, yes, fewer. But since we're still expanding, we still expect to have a slight pickup in our headcount. But yes, on a per capita basis, fewer workers for the same amount of output.
So what, 20% fewer is necessary?
No. It depends on the function. So if you have operations function, probably higher than that. Frontline functions, maybe 15 to 20%. Functions that involve IT, maybe also 20 to 25%. But I have to warn you, Haslinda, we're just in the beginning phases of it, and the numbers I am citing are not broad-based. They're specific. For this application, it used to be X. Now it's 80% of X.
You tapped the bond market recently. I think it's $2.5 billion. But it's such a short tenure for quite a huge sum. What's the thinking behind that?
Well, it's part of our asset liability management. The bond is our part of our funding mix. And when we expect rates to go down, we try to keep our liability short. We don't want to be stuck in a high interest liability. So that's why we kept it short. But it's going to be something that's part of our arsenal in terms of asset liability management.
Where will the proceeds go? Is it infrastructure projects?
Mostly sustainability lending. I don't know if you're aware, but a third of our business lending is now in sustainable projects, mostly green and blue projects.
And how big are these projects, and what's the ambition, what's the goal?
Well,
how will it trickle down?
I think the goal is to have as much as we can of these projects, but banks are on the reactive mode. We wait for a borrower to look at a green project, or if they want to look at a project, we encourage them to look at green methodologies so that we're able to lend to them as part of our sustainable financing initiative.
Any plans to tap the market again for the rest of the year?
Probably not the rest of the year, but on a regular basis, you should expect us to be tapping the market.
So 2026 still a possibility?
Yeah, 2026 still a possibility.
Any plans for acquisitions?
No, not at the moment.
Why not?
Well, organic growth is doing well. We have a lot of runway, and I think we have all of the tools that we need in our arsenal right now.
When you take a look at all the uncertainties around the world, geopolitics, as you mentioned, is a key one. How are you assessing developments, for instance, around the region, especially in the South China Sea, relations between the Philippines and China?
That's a sensitive one because we're caught in the middle between our security partner and our largest trading partner. So we watch that closely. I don't have an answer. I just hope that it doesn't escalate into something that we don't like.
All right, Nestor, good to have you with us.
Thank you,
Do come back.
Haslinda.
It shouldn't be a yearly basis. Nestor Tan, CEO and President of BDO Unibank. Now, here's some more stories we're tracking in Southeast Asia. 2 Chinese ships have collided after one of them chased a Philippine Coast Guard vessel in the South China Sea in the latest encounter between the two nations in a disputed waterway. The Philippine Coast Guard released video and photos of the incident, said to show a China Coast Guard vessel hitting a Chinese Navy ship. The Philippines says the China Coast Guard ship suffered substantial damage. Indonesia undergoing its biggest armed forces overhaul in decades, including more than 20 new regional commands. President Prabowo Subianto attended a ceremony bringing in new commands across the Army, Navy and Air Force. Prabowo is a former Army general, and the overhaul comes as he ramps up defense spending for Southeast Asia's largest military. Now let's do a check on Indian markets before we head to break. Of course, India starts trading in about 2 minutes. It is looking pretty negative in the pre-market session. The Sensex currently down by 0.1%. Coming up, we'll have a look at the bright spot in India's equity markets. Keep it here with us. This is Bloomberg. Let's do a check on the Indian markets a few minutes after it kicked off the session today. We are seeing red pretty much across the board. The Sensex and the Nifty currently down about 0.1%. Of course, Indian stocks have slumped after a 4-month rally early in the year. Investors fretting about Trump's tariff policies, also weak earnings. And remember that global funds have withdrawn about $3 billion from local shares. Early signs of a rebound in India's domestic consumption are prompting some strategists to argue that corporate earnings growth may be approaching a turning point. Let's bring in Bloomberg's Asia equities reporter Ashutosh Joshi joining us from Mumbai. Earnings season in India has been pretty much mixed. Investors have been focusing on India's domestic demand, which remains in good shape. I mean, how have consumption-linked companies, been so far?
Yeah, good morning. Consumption-linked sector has been one area that's done well this quarter. Most of the companies, from automakers to jewelry firms to consumer goods companies, their earnings have been more or less on the line of expectations. More than that, their commentary on the outlook has been bullish. Some of the top companies, such as Hindustan Unilever, have reported good numbers and volume growth, as well as ITC Limited, which is the top cigarette maker, has also posted strong numbers. Automakers, Maruti Suzuki, Hero Moto, their earnings have also been good. This points at demand remaining firm in some pockets of economy, and that's helping these companies.
Speaking of demand, Ashutosh, are we seeing any sort of divergence in demand coming from India's rural areas and urban areas?
Oh, yes. This remains one of the most watched aspects of India's domestic demand. Rural parts of India have been doing better than the urban areas. Demand coming from rural areas has been strong in last few quarters. However, same has remained sluggish in urban areas. This is the reason companies that are more inclined towards revenues generated in rural side of the country have done well in recent quarters, while that hasn't been the case for urban-centric companies. Going ahead, analysts are hopeful that helped by India's recent tax breaks and rate cuts, as well as outlook for a strong monsoon, both parts of the economy will start firing, and that prompts some of strategists to hope for a rebound in India's earnings expectations. Some of local brokerages expecting benchmark Nifty's earnings per share to rise 10% in this fiscal year. That compares with barely 1% growth for the previous period.
When it comes to the equity markets, Ashutosh, we know that domestic investors have been the backbone of India's markets. They've kept their faith in local stocks. What's been their reaction to Indian earnings?
Domestic money remains the backbone of Indian equities, as you said, and that remains to be the case. In fact, domestic investors have topped up their bets on local shares at a time when markets has witnessed sell-off. Yesterday, we reported the data for month of July. In month of July, India's Nifty fell almost 3%. But during the same month, mutual funds in India, which largely get flows from retail investors, attracted almost $5 billion worth of net flows from investors. That contrasts with foreign investors who, in fact, took away almost $3 billion from Indian equities the same month. So retail investors and domestic money remains firm on Indian equities.
As you said, foreign investors have withdrawn about $3 billion. You got to wonder what would make them return, or given the tariffs that we're seeing from the U.S., might they, stay away even longer?
Obviously, uncertainty related to tariff is one reason for the foreign sell-off. At the same time, Indian equities remain one of most valued assets within Asia as well as in the emerging market space. I think these are the factors that stopping flows from foreigners. But with expectation of earnings growth resumption, there is a case for foreign funds to return to India.
And we know the likes of Mark Mobius still love India. Ashutosh, thank you. Bloomberg's Ashutosh Joshi there. Now to some more corporate stories we're tracking. Micron has raised its fiscal fourth quarter sales and profit outlook, citing stronger DRAM prices and high bandwidth memory demand. Revenue now seen up to $1.3 billion, with earnings as high as $2.92 a share. Shares closed more than 4% higher. Micron has been one of the best performing chip stocks this year. Ford has unveiled a $5 billion plan for a new line of budget EVs, starting with a $30,000 pickup truck set to roll out in 2027. CEO Jim Farley calls it a bet to take on Chinese rivals, warning there are no guarantees in the unpredictable U.S. EV market. The plan includes a $2 billion overhaul of Ford's Louisville plant. And Paramount is buying the exclusive rights to show all events from the Ultimate Fighting Championship in the U.S. The 7-year deal is worth $7.7 billion and bolsters the Paramount Plus streaming service. UFC owner TKO Group jumped 10% in New York trading. Paramount says it will also look at buying international rights in the future as they become available. Now to an update on the gold markets. President Trump has announced in a post in social media there will be no tariff on U.S. gold imports. We've seen big swings in gold prices in recent days after U.S. Customs stunned traders by declaring the imports would be subjected to duties, potentially upending the global bullion market. Gold's status as a scarce financial asset sets it apart from other commodities such as copper. We know that gold will not be tariffed. Trump says we're looking at $35.50 after that drop that we saw recently. Gold $33.48.72 as we speak right now. We're also taking a look at Bitcoin. We've seen that 100% surge over the past year, making it too hard to ignore. In fact, when it comes to Bitcoin, 7 out of 10 funds have invested in Bitcoin via ETFs. We're seeing Bitcoin currently flat, 118,876. Ether also on the up, currently up by about 1%. We know that the recent legislation is creating a favorable regulatory landscape, helping crypto gain a greater foothold in the financial mainstream, the likes of Citi, JPM, among those in on it. And of course, we're keeping a track on the RBA. It is decision day for the RBA. It is expected to cut 25 basis points. This would be its third rate cut of the year. Bloomberg Economics saying RBA to cut will continue its cautious easing cycle. The S&P flat right now. That is it for Insight. Stay with us for the RBA rate decision due in the coming hour. Horizons Middle East and Africa is next. This is Bloomberg.